With me today is Sarannah McMurtry, who is the EVP and General Counsel at First Acceptance. Welcome, Sarannah.
Thank you. Glad to be here.
So tell us a little bit about your background. How did you get into insurance?
I started out I went to law school.
Okay.
And went into the insurance defense world.
Okay.
And worked as an outside insurance defense counsel for a number of years. And as my practice evolved, most of it was coverage related, bad faith litigation related. And over time, that became a specialization. Of course, as an insurance defense attorney, you work with carriers all the time. I started out in New Jersey and Pennsylvania.
Okay.
That's where I went to law school at Rutgers. So I started out up there and worked for about 10 years. But my husband was from Nashville.
Okay.
And we moved to Nashville.
Great city. My son lives there.
Had to restart and reset as far as what our careers look like from a legal perspective. And I worked in a couple of firms for a little while and got a call from a recruiter.
Okay.
And they were looking for somebody who could go in-house and be a claims counsel.
Okay.
And I thought that sounded really interesting because at that point I'd been in practice for about 14 years and they were looking for someone who had coverage, bad faith experience, had multi-jurisdictional background, and therefore understood the market and the industry from a number of different places. And it felt tailor-made.
Yeah, no,
And
that's
so I was hired by First Acceptance, actually Acceptance at the time.
okay.
We've since modified the name of the company. We're First Acceptance, and went in as a claims counsel. And that role was providing legal advice and support for the entire claims operation and all their jurisdictions, helping them be trained to understand how to draft coverage letters, how to write reservation of rights letters, how to avoid bad faith setups and circumstances, and just generally how to look at their files and assess their litigation and understand how the courts might look at them when they were going to be litigated. Help them. Person gets involved in an accident in Montana. We don't write in Montana. And so help them understand what the implications of that are, what the law in Montana might do for them, and what the complications might be in their claim handling they need to be aware of. And that expanded to dealing with consumer complaints, Department of Insurance connections, and working with the departments of insurance and getting to know basically the insurance company operation.
Yeah, so you've got your hands full. That's a big company in multiple states, non-standard company.
It is non-standard, which is an interesting niche.
Yeah, and it comes with its whole other set of challenges. I started my career in a non-standard company as well, and you're dealing with little limits and sometimes big injuries and oftentimes very creative trial lawyers.
That's what I call the bad faith trifecta.
Okay.
It's this toxic brew that creates bad faith exposure.
So how do you deal with that as a company? Like, how do you stay in front of that so you're not caught with your pants down, for example? Oh, no, we got to pay a lot of money on this one.
A lot of it is training and being very proactive in your claims handling in the first place, understanding what's expected of a claims adjuster.
Right.
Timely communication is so significant.
Okay.
And teaching the adjusters not only that they have to pick up the phone and call people or email. They're younger, they email, they don't pick up the phone the way you and I probably did. But they have to be proactive in their communication. That's very important. But also understanding how to communicate and what to say, and understanding the nuances of their claim that helps them talk to people. You get a time limited demand. That's the normal thing that becomes the trigger, and how to read through those. And we do training. We do weekly claims coverage reviews, do a lot of just spontaneous show up at the door, talk about things, or Zoom these days, and talk about cases. But that's the biggest piece of it, is giving the adjusters a good foundation for understanding claims. What are unfair settlement practices? What are unfair claims practices? What are the laws in that state? Because once they've got that, then they're not going to catch every trick. Because no matter what we do, the plaintiff's bar seems to build a bigger mousetrap.
Oh, of course. They always seem like they're one step ahead. Yeah. You know, it's crazy. So what do you do in situations where you have a trial lawyer that sends over, say, something totally unreasonable, a 15-minute time limit demand, a one-day time limit demand? Are those even valid?
Once upon a time, I'd have told you absolutely no way. And I still think that the answer in the majority of jurisdictions is that something like that is unreasonable on its face and therefore would not be valid. Unfortunately, if you start talking about 10 days,
Right.
It might be. Or you might have a jurisdiction like Florida where the issue that the adjusters deal with is that the courts expect you to be proactive and not wait for the demand to come in. And so you can get into what we used to call too little, too late. And that is you didn't get around to making the offer because time had passed too long. And the court will say, this was catastrophic. You had a minimum policy. Why would you not have tendered that within 48 hours of receiving the claim? There may be a valid reason for that. There may not be. So you've got to know your facts.
Yeah, it's tough. I came up in claims in Florida for most of my career, and bad faith was obviously the game for years and years. Florida was the epicenter. It's no longer the case. I think the epicenter's moved into your backyard, and in particular Georgia. And it seems like a lot of what the trial lawyers were doing in Florida was probably passed along at maybe plaintiff conferences like this. Are you seeing some of the same gamesmanship?
Oh my gosh, yes. I used to, when I first started working with the claims operation, we were very engaged in Florida.
Yeah.
And then we started to see things come in Georgia. And I said, oh, that's just Florida. Georgia will never let that happen.
Yeah.
And what I really have experienced is that in a lot of ways, Georgia's actually worse than Florida. The reason I say that is because in Florida, we played this game with regard to whether you were proactive enough, did enough on the front, not just responding to the demand, but did you initiate the negotiation?
Right.
Whereas in Georgia, I'm sure you've probably seen some of it and heard other people talk about it. They've raised this idea of the time limited demand and the mirror image rule to a very carefully played game by the plaintiffs. There's a case out there where the check was received within the time limit of 15 days, but it was received on day 11. And the plaintiffs argued that the demand was not accepted because the check was received on day 11 and the demand specified that the check be received on day 15, not just within 15 days, but on day 15. And they had a rationale behind that. And therefore, you have no settlement. Now, is that bad faith? We don't know the answer to that question, but what we know is that we don't have a settlement, and that gives the plaintiff the opportunity now then to pursue that bad faith claim.
Wow, that's challenging. I know we had a corporate office up in New York, and it was a big global company. And one of the games was they would fax or mail their time limit demand to the corporate office, attention to nobody, or attention to underwriting or pricing or whatever, knowing it was never going to get to claims office. And how do you see games like that? Like, how do you address things like that?
I would say probably I don't see that quite as much. It does happen, and I have seen it happen over the years.
Yeah,
that's not really one of the more current ways of things that happen. What I do see, and I saw recently in a case, was what the attorneys will say is, you cannot communicate with me verbally about this demand. If you have questions or need clarification, the only way you can communicate with me is via email at this email address, via fax at this fax number, or snail mail, of course. And we had a circumstance not too long ago where the adjuster, for whatever reason, started with the fax. And the fax bounced back. Okay, that doesn't work. Now what? So the next step was they tried the email address and it didn't bounce back, but they were concerned. They called the attorney's office. This was on a Friday. They said on Monday morning, they called the attorney's office and said, hey, just checking. Did you get my fax about this time limited demand? And the next thing we knew, we had verbally communicated and we were off to the races.
Wow.
And the accusation was no settlement.
Yeah, and it's crazy, right? It's like you're acting in aggressive good faith.
Yes.
And you get turned around and hit with bad faith. Now it sounds like some states have taken action. Florida's taken some steps. I think you mentioned when we were talking before the show, Georgia's doing something.
Oh yeah, we're very excited. We don't know how it's going to play out yet, but Georgia has just passed legislation that's actually, as of today, sitting on the governor's desk. It's expected, as I understand it, to be signed by the governor. It's an amendment to the pre-suit demand statute that Georgia has had, the settlement demand statute. And what it is designed to do is to eliminate this highly hyper-technical mirror image tactic that the plaintiffs have been using, and essentially establishes 4 key elements that constitute a demand. And if those demands are met, then you have a settlement. Everything else is the implementation of that.
Okay.
So it will eliminate things like this hyper technical thing of the check came on day 11 and was supposed to be there on day 15.
Right.
The check was made payable and it wasn't made exactly out the way that it was written in the letter.
Right.
We've seen that where a check has only 90 characters and what they send you is 110 characters, and you try to abbreviate and suddenly you've not sent the check. The check says not valid after 180 days. Can't include that on the check. These are the kinds of things that have been in these demands. The statute's designed to eliminate that kind of play.
A step in the right direction,
Yes.
but you know there's going to be some type of response.
Of course.
What do you think will be up their sleeves next?
I don't know the answer to that, but I am suspicious, but cautiously optimistic because the GTLA, which is the Georgia Trial Lawyers Association, primarily plaintiffs' attorneys, they assisted. They had input into this statute.
Okay.
So we're hoping that this really was a consensus building exercise and that it will eliminate the worst excesses that we've been seeing in Georgia.
Yeah.
The Florida passed law last year, which has made a big difference in how we manage claims down there.
Yeah, it's funny. We were in the epicenter of last year's legislative changes, and premiums are still going up. And the interesting thing was when that legislation passed, I believe the number was 300,000 lawsuits were filed like that following week before it went into, between the time it was signed and when it went into.
And we saw some of that. That is like the State Farms of the world, but we certainly saw a lot of it.
Yeah, and that's going to take time to shake out. You tell people that are upset about their premiums, myself included, but you got to realize that good things are happening at a legislative level, but it takes a while. And until it's all sorted out, you're going to have to continue to pay. It's a risk-based industry.
And it's not only that, the changes in the legislation, but the big things that we've been experiencing just within the industry and the auto market. Insurance premiums have gone up ever since COVID.
Oh yeah.
And it's supply chain issues. The cost of repairs of vehicles has gone up so substantially. The ability to get the parts and especially like chips and all those things that you need to fix the cars have caused delays, which means rental costs go total loss and salvage. A vehicle, in the non-standard world, our average vehicle is around 10 years old. And a 10-year-old vehicle, when it doubles in price, suddenly it is a big hit.
Absolutely. Yeah. And these are things that a lot of folks that aren't privy to the knowledge that we have being in the industry really don't understand. And there's not a great mechanism for the average person to really understand it unless we educate them. And that's got to be part of the claims process.
And I do think they see it in their own lives. They just don't translate it into how that affects their insurance because people see how expensive it is to buy a new car, for example.
Oh, yeah.
But they don't recognize that the costs associated with paying for that car when it's damaged causes insurance to go up. And of course, the nature of accidents has changed. We see more severe accidents happening. It seems like across the board. Not just us, but just...
Yeah, the post-COVID driver craziness.
Yeah.
It seems like the average mile per hour on the freeway has gone up about 10 to 15. Now, this has been a fascinating discussion. If somebody wanted to learn more about your company, where would they go?
Firstacceptance.com is our website.
Great.
It is a little bit in transition right now. I think I mentioned to you just before we started talking that we had an insurance agency as well as our insurance company.
Yep.
And we sold the agency. And so we're rebranding and refocusing everything into the single bucket of the insurance company right now.
That's great. Yeah.
It's a very exciting time for us.
Absolutely. Great. It was great to have you on the show. Thank you so much.
All right. Thank you.